So in this video, I'm going to explain the three rules of trading. Number one is when we want to catch a reversal on the liquidity that we have, the two types of liquidity that we have. We have the type A and we have the type B. So in a case whereby you spot type A liquidity forming, for example, this is a type A liquidity that we have here. This is the minor, right? This is the major. So before this major, before price take out this major level, here, all right. So when we have price take out this low, okay, we are going to wait for a change of character here, and this is where the change of character happens. So when the change of character happens here, that is when we can now go to 15-minute time frame to look for our entry. The same thing here. This is minor, this is major. Then we have the sweep of liquidity. We have two minor here. This is when the change of character happens. So when that occurs on 4 hours time frame, then we go to what 15-minute time frame to look for what entry. To look for entry. So here the first rule is that when a reversal of liquidity wants to be traded, a change of character must occur on 4 hours time frame before going to 15-minute time frame for entry. So in this case here, after this change of character had occurred, then we move towards 15 minutes for an entry. This is for catching a reversal on the liquidity. That's this movement to take out the high that we have here. Okay, that is for that case. So it is also the same with the type B. That was type A. So for type B, we can see that price was pushing price. We are uptrend. We are in an uptrend. Price push down to push to the upside. But this here created a setup. When this setup happened, it followed up by taking out this low. So immediately we should know that what price is going to take out this high, which will complete the type B. So what we should look out for in this area is what is change of character. All right, to take the trade to this level, to break this level. Okay, now the second one is on 15-minute time frame. So after we have confirmed our entry, okay, after we have seen our change of character on 15-minute time frame. So when we go to 15-minute time frame, what are the things that we should look at for? The things we should look at for should be number one, there must be a shift. There must be a market structure shift in the market, okay, before we take our entry. We already know our entry model, okay, but this thing I'm saying are the rules that must be checked before we take an entry. If we are catching a reversal on type A or type B liquidity, there must be a change of character on 4 hours time frame. That's number one. Then in number two is when we go to 15-minute time frame to take an entry, the rules says that there must be a market structure shift. Okay, there must be a market structure shift before an entry. Okay, so let's push to 15-minute time frame now. So here we have market structure shift. We can have more than one market structure shift in the market. I've made videos on that. All right, this is a shift. This is a shift. Okay, this is a shift. This is another shift. All right, and we have three types of shift. So these are shifts in the market. These are shift that occurs before this change of character. That's number two. That's on 15-minute time frame. So on 15-minute time frame, there must be a shift Now, the third rule says that when you are expecting a change of character in the market and it seems as though market is moving um, in a way that is not showing clear break of structures, you should zoom out completely. When you zoom out completely, you'll be able to see the break of structure, and you must have at least two break of structures in the market, all right, before you can draw the level of your change of character. Okay, so in this case here, right, if we didn't zoom out completely, we would not have been able to see this break of structure that we have here. We have a break of structure here, we have another break of structure here. If we didn't zoom out completely, we will not have been able to see it. So that means that in a situation where you are waiting for a change of character and you can't clearly see your break of structures, you should zoom out. All right. Then the other one is, which is still the same, is that there must be minimum of two break of structures in the market before you can confirm a change of character. So that means that if we only have one break of structure, like let's say this is not here, okay, and this is the only break of structure that we have, that means we are not going to take this trade. Okay, so the third rule says that there must be minimum of two break of structures in the market, right, before we can authenticate our change of character. So these are the three rules that we have in trading. Thank you.